You are standing in front of a house. It's not yours. Not yet. The paint is peeling. The lawn is overgrown. The windows are cracked. To everyone else driving by, it's an eyesore. To you, it's a ladder. Real estate has created more millionaires than any other asset class in American history. More than stocks, more than crypto, more than any business you can name. But the version they show you on TV? The renovations, the profits, the checks. They skip the part where you lose everything. They skip the late nights, the contractor who vanishes, the tenant who destroys your unit. They skip what it actually costs to climb. Today, we show you everything, every level, every income, every sacrifice. This is your life, as every level of a real estate investor in the USA.
Level 1. The Dreamer.
You are 24 years old. Your alarm goes off at 6:47 a.m. You hit snooze. Twice. You drive to work in a car you still owe $14,000 on. You make $42,000 a year. Before taxes. After taxes, after rent, after groceries, after gas, you have $300 left. Sometimes $200. Sometimes nothing. And somewhere between your third hour of scrolling and your fourth YouTube video, you find it. A guy who makes $10,000 a month in passive income from properties he bought with no money down. You don't believe him at first. Nobody does. But you keep watching, and then you start reading. Rich Dad, Poor Dad, the book on rental property investing. Bigger Pockets forums at 11 p.m. on a Tuesday. You're not an investor yet. You're a student, and tuition is free. The dangerous part? You start to believe it's possible. For you. Most people stop here. They watch, they read, they dream, and then they go back to sleep. You don't.
Level 2. The Wholesaler.
You don't have money. You don't have credit. You don't have experience. But you have a phone and a hunger that terrifies you a little. Wholesaling is the entry point no one teaches in school. You find distressed properties, homeowners underwater, divorces, deaths, neglected houses bleeding equity. You get them under contract, and you sell that contract to a real investor for a fee. No property bought, no renovation done, no landlord headaches, just a contract and a check. Your first deal takes 90 days. You drive for dollars, which means you literally drive around neighborhoods looking for ugly houses. You knock on doors. You send handwritten letters. You call numbers off a list. You get rejected 47 times. Number 48 says yes. A 68-year-old man in Akron, Ohio. His wife passed. He can't maintain the house. He wants out fast. You put it under contract for $95,000. You find a cash buyer within a week.
They pay $115,000.
Your assignment fee? $20,000. In one transaction. That's more than you made in the first 6 months of your job. You stare at the wire transfer confirmation for 3 minutes straight. You don't cry, but you almost do. Income at this level, $20,000 to $80,000 per year. Entirely deal-based. No deals, no money. But the ceiling? There is no ceiling.
Level 3. The House Hacker.
You saved $15,000 from wholesaling. Not enough to retire, but enough to buy your first property. FHA loan, 3.5% down. You buy a duplex in Cleveland for $180,000. You put $6,300 down. You move into Unit A. You rent Unit B for $1,100 a month. Your mortgage is $1,050. Your housing cost? Zero. Actually negative. You're getting paid $50 a month to live somewhere. This is called house hacking, and it just changed everything. While your friends are throwing $1,200 a month at an apartment they'll never own, you're building equity. You're covering your mortgage with someone else's money. You're learning how to be a landlord while you sleep in the next room. Year 1. The toilet backs up. The tenant calls you at 11 p.m. You don't know how to fix it. You panic. You figure it out. Year 2. You refinance. Your property is now worth $220,000. You pull out $28,000 in equity, and you do it again. Net worth at this level, $50,000 to $150,000. Monthly cash flow, $200 to $800 per property. Properties owned, 1 to 3. You are no longer a renter. You are an owner, and you will never go back. Level 4. The house flipper. You've been patient long enough. You want a bigger check. Faster. You find a distressed single-family home in Phoenix. ARV, after repair value, $320,000. You buy it for $195,000. Renovation budget, $55,000. All in, $250,000. After commissions and closing costs, you walk away with $58,000 in 4 months. You are officially a house flipper. But here's what the TV shows don't tell you. Month 2, your contractor goes dark, doesn't answer texts, doesn't show up, leaves the kitchen half-gutted. You lose 3 weeks and $8,000 finding a replacement. Month 3, the inspector finds mold behind the master bathroom wall. Not in the original budget, $12,000 more. Month 4, the market shifts. Your comparable sales from 6 months ago don't hold. Your agent tells you to drop the price. You still make money, but not as much as you thought. And you learned something no YouTube video could teach you. The deal doesn't end when you buy it. The deal ends when you sell it. Income at this level, $50,000 to $200,000 per year. Risk, the highest you've taken on yet. Reward, faster capital than any salary you've ever earned. You're addicted, and you know it. Level 5. The BRRRR. Buy, rehab, rent, refinance, repeat. 5 words that define the next 3 years of your life. You stop flipping, or mostly. You realize flipping is trading time for money. BRRRR is how you build a machine. You buy a distressed rental in Kansas City for $80,000. You put $35,000 into renovations. All in, $115,000. After repairs, the property appraises at $160,000. You do a cash-out refinance at 75% LTV. You pull out $120,000, more than you put in. The bank is now funding your portfolio. Your tenant is paying the mortgage, and you own a property with $40,000 in equity, for free. You do this 7 more times in 18 months. Portfolio, 12 doors. Monthly rent collected, $14,400. Monthly mortgage payments, $9,200. Net cash flow after expenses, $3,100 a month. Not enough to retire, but enough to quit the job. The day you put in your notice is one of the strangest days of your life. Your boss looks at you like you're crazy. Maybe you are. Or maybe you just figured out something they never will. Net worth at this level, $200,000 to $700,000. Monthly passive income, $2,000 to $8,000. Properties owned, 8 to 25. You are no longer working for money. Money is working for you. Level 6. the multifamily operator. Single family was the training ground. Multifamily is the game. You close on your first apartment complex, 32 units, Memphis, Tennessee. Purchase price, $2.4 million. Down payment, $600,000. Pulled from equity in your single-family portfolio. Monthly rents, $38,400. Annual gross revenue, $460,800. After expenses, mortgage, and management, net operating income, $180,000 per year. Your cut, $90,000 from one asset. You hire a property management company. You stop taking 11 p.m. calls about broken toilets. You start taking 11 a.m. calls with monthly reports. This is the moment real estate stops being a side hustle and starts being a business. You buy a second complex, 48 units, Little Rock, Arkansas. Now you're managing over 80 doors. You have a team, a bookkeeper, a property manager, a real estate attorney on retainer. Net worth at this level, $1 million to $5 million. Annual income, $150,000 to $400,000. Assets under management, $3 million to $15 million. You have crossed a line most people never cross. You are wealthy. Not rich, not yet, but wealthy. The difference? Rich is a number. Wealthy is a system. And yours is running.
Level 7. The syndicator.
You've hit a wall. Not a problem wall, a capital wall. Your portfolio generates real income, but the deals you're seeing now, 200 units, 350 units, you can't fund them alone. So you learn the most powerful skill in real estate, raising other people's money. You structure your first syndication, a 180-unit complex in Dallas. Purchase price, $18 million. You raise $5 million from 22 investors, doctors, attorneys, engineers, people with capital but no time. You have time. You have the deal. You have the experience. You are the general partner. They are limited partners. You put in 5%, they put in 95%. You get 30% of the profits. Your acquisition fee, $180,000, paid at closing. Your asset management fee, $90,000 per year. Your profit split at exit, potentially $1 million to $3 million. You just made more from one deal structure than most people make in a decade. Assets under management, $20 million to $100 million. Annual income, $300,000 to $1 million. Net worth, $5 million to $20 million. Your name is starting to circulate in certain rooms. Rooms most people don't know exist.
Level 8. The developer.
You are done buying what already exists. You are building what doesn't. Your first ground-up project? A 240-unit mixed-use complex in Nashville. Retail on the ground floor, apartments above. Total project cost? $47 million. Equity raised? $14 million. Construction loan? $33 million. 18 months to build, 6 months to stabilize. Exit? Sold to an institutional buyer at $68 million. Your promote on the deal? $4.1 million. You are no longer buying real estate. You are creating it. The risk is a different animal now. Zoning battles, permit delays, supply chain disruptions, interest rate spikes mid-construction. One bad bet can take everything. And you've seen it happen to people smarter than you. But the reward? Nothing in real estate compares. Net worth at this level? $20 million to $100 million. Annual income? $1 million to $5 million. Deal size? $10 million to $200 million. Team size? 15 to 40 people. You have a CFO,
A director of construction.
a capital markets team. You have stopped doing deals. You have started running a company that does deals.
Level 9. The fund manager.
You don't raise money deal by deal anymore. You raise it once, at scale. You launch a $200 million real estate private equity fund, institutional capital, family offices, pension funds, sovereign wealth advisors, people who write checks with more zeros than most people have seen in their lives. Your fund acquires 9 properties in the first 18 months, 1,800 units across 6 markets, $3 million in assets under management. Your management fee? 1.5% of AUM. That's $5.1 million per year, just to manage the fund, before your carried interest on profits. You have a chief investment officer, a head of acquisitions, a compliance team, a fundraising team, 30 people who work for a company you built from a duplex in Cleveland. You no longer look at individual properties. You look at markets, at cycles, at macroeconomic data. You think in portfolios.
Net worth at this level? $50 million to $300 million.
Annual income, $3 million to $15 million. Assets under management, $100 million to $500 million. Your phone still rings, but the calls are from senators, from mayors, from sovereign wealth funds in Abu Dhabi. You answer the ones you want to. You ignore the rest.
Level 10. The ghost.
You don't have a LinkedIn. You don't do interviews. You don't post on Instagram. You own buildings, whole blocks, entire neighborhoods. In some cities, you own the skyline. Portfolio, $1.2 billion in real estate assets. Net worth, $400 million. Annual income, difficult to calculate because you stopped counting. You have a family office, 8 people, entirely dedicated to managing and growing generational wealth. You still wake up early, not because you have to, because the habit never left. The duplex in Cleveland is still in your portfolio, not because it makes financial sense, because it's where it started, and you never forget where it started. People ask you for advice. What's the secret? What's the one thing? You always say the same thing. The first deal is the hardest, not because it's the most complex, but because it requires you to believe, before you have any proof, that it's possible.
Your name is on buildings.
Your name is in LLC structures no one can trace. Your name is in the quiet conversations of people who are exactly where you were at level 1. Dreaming, watching, waiting. You remember that feeling. The alarm at 6:47 a.m. The $300 left after bills. The YouTube video at 11 p.m. You remember thinking, could this really work? Now you know the answer. And somewhere out there, in a car that still has $14,000 owed on it, someone is watching a video. And they're about to find out too.
10 levels. 1 life.
Every sacrifice. Every dollar. Every deal. If you made it to the end, you already think differently than most people. Subscribe, because we're just getting started. Every rank, every level, every world. This is Every Rank.